Good day. My name is Dr. Stephen Oladoyinbo, Distant Learning Institute, University of Lagos. I'm the e-tutor for FIN233, Introduction to Finance. We look at Study Section 2, Part 2 of the Study section. Recap. In the earlier part of Study Section 2, we have been able to explain the characteristics of finance, i.e. finance and business growth, and basis for performance measurement. We also define financial management and state its responsibilities, e.g. definition of financial management and different roles of financial manager. We also highlighted the steps in strategic financial decision. Financial decision making, e.g. determining the objectives of the company, identify courses of action, collect, collate, analyze, and summarize data for decision making. Study session 2. We are starting right away now. Financial management decision is a subtopic we are looking at. The financial manager also becomes involved in strategic planning and control of the company and make decisions relating to the following areas. 1. Investment decision. This is an advice to be offered the company where to invest and how much should be invested. 2. Financing decision. This is regarding interdependence of the cost and the relative risk associated with the funds. And thirdly, dividend decision. There's a quality advice on dividend and profit sharing or reinvestment of the profit into the business of the organization. Learning outcomes for study session 2B. After studying this section, you should be able to 1. Identify and explain the types of financial decision in finance, and secondly, state the activities in an organization in which the financial managers are involved. External decision involving parties. Whether to carry out a takeover or a merger. To carry out a takeover or a merger involving another business. Whether to engage in a joint venture with another enterprise. These investment decisions. Whether to sell off unprofitable segments of the business. Whether to sell old or surplus plant and machinery. And then the sale of subsidiary companies. Financial decision. Financing decision determines how a company's assets are financed. The right-hand side of a balance sheet shows the results of previous financing decisions. 1. Taking more credits. 2. Retention of profit for investment in the business. 3. The issue of new shares to raise capital. 3. Borrowing. 4. Borrowing from banks or other lenders. And the 5th one, leasing of assets as an alternative to outright purchase. Financial risk. Financial risk is the risk arising from mismatching sources with users. This can be best explained by reference to the commonly known concept of overtrading. It is distinct from the commercial risk faced by any firm. In general, it can be stated that the sources of finance used by a firm should be matched to the capital requirements of the firm. It should also be noted that it is important to state that long-term projects should be committed to long-term fund, while short funds should be utilized for a short-term project. Any deviation from the aforementioned will not be an ideal situation for the organization. Dividend decision. The dividend decision determines how earnings after taxes are distributed to preferred and common shareholders or retained for investment, and it shows how earnings after taxes were determined. The amount of preferred stock, dividends, and the relationship between earnings per share or dividend per share is surplus assets and no return for the business. The business is likely to be paying the cost of capital in respect of the money tied up in the asset. And idle assets contribute nothing to the fortune of the organization. The other side of the dividend decision is that if profits are retained, there's less to pay out to shareholders as dividend, and this might deter investors. An appropriate balance needs to be struck in addressing the dividend decision. How much of the profit should the company pay out as dividend, and how much should they retain for investment to provide for future growth and new investment opportunities should be properly sorted. Other related activities involved by financial managers. The other related activities in which financial managers are involved include: 1. Financial manager works with other managers within the organization in the preparation of the various plans with a view to producing the projected financial statement of the company. 2. Financial managers match each financial managers There are also other activities of an organization in which financial managers are involved. There's a stock market activities and the external environmental activities, particularly those external limitations which financial managers should recognize when they take decision. Financial managers must appreciate how critical certain steps are in the decision-making process, the opportunities available in finance, as well as specifying the primary goal of management in a corporation and describing the function of managerial finance. Self-assessment question, SAQ for study section 2. SAQ 2.5. Finance manager will advise the division of profit between dividends or reinvestment of the profit into the business is known as A. Financing decision, B. Dividend decision, C. Investment decision, D. Acquisition decision. Choose one correct answer. SAQ 2.6 dash is a form of advising the company of the alternative source fund available to them, the relative cost, the interdependence of the cost, and the relative risk associated with the funds. A. Financing decision, B. Dividend decision, C. Investment decision, and D. Acquisition decision. The third one, SAQ 2.7 dash is the duty extent to planning, analysis, and improvement of every phase of the company's operation, which are measured with a financial yardstick. A. Financial controller, B. Cost manager, C. Financial manager, D. Treasurer, E. Director. Should you require more explanation on this study session, please do not hesitate to contact your e-tutor via the learning management system. Are you in need of general help as regards your studies? Do not hesitate to contact the DLI AG Center by email or phone. For example, iag@dli.unilag.edu.ng, telephone 0803 336 6677. See you in the next class where we will x-ray the objectives of financial management. Goodbye.